Boys and girls, welcome back to my channel. My name is Rob Keating and I'm here to help you navigate the wall of information that is the stock market. Firstly, I was looking at some companies last night and was going to make this video last night, but I didn't. And I'll take you through the process in a second. But these two companies here, JD.com and NetEase, were at the top of the Hong Kong market movers this morning. That is today because Hong Kong's already happened. But firstly, going backwards to Friday and the sell-off, the S&P was down 2.76%, the Nasdaq was down 2.5%, which if you're new to this stuff is quite a lot. Everyone was getting rid of everything come Friday. Now what I noticed on Friday was that the Chinese companies listed in the USA were actually up. And I got a list here which was taken from Friday of +7, +7, +6, +3, +3, +2, so on and so forth. I won't go through them all because we'll be here all day. But these companies were actually up when everything else was down. So how does that make any sense? These were the only other companies on the S&P 500, that is 500 companies, which were up. There's about 15. So when you notice something that doesn't quite add up, something that doesn't make sense, what do? You got to find a big list and work through all the information and the data. So what I've done here is I've got a list of all the companies, Chinese ones, which are based in the US. Now there's actually about 200 of these. I only went through about 100 because it's going to take forever otherwise. And then what you can do is put it in Excel and use something like Yahoo Finance. Now you can actually pull stock market information into Microsoft Excel and you can do loads of funky stuff with it and figure out all these different gaps and navigate bits of information and predict outcomes. So what I did was I grouped together the industry by 52-week high and low. So for things like automobile, banking, chemicals, where are they in percentage of their 52-week high, that is the share price that's been over the last year, and the 52-week low. And then I put it in order here, indicated by the colours on the right hand side. The deeper the green, the higher the number, the higher the percentage is. So if you look down towards the bottom, 87%, oil and gas is at 87% of its 52-week high. Now, there's only two components in that little list, so it's taken slightly out of context, but you're kind of seeing where we're going with this. We're saying these ones are high grouped, these ones are lower. So if you go to the bottom of the list, the ones I've highlighted, software and IT services, we're saying 24 software companies are at 25%, the average of their 52-week high and low. That seems pretty low, considering there was a sell-off on Friday and these Chinese companies went up. Why are these companies so low? So that sounds like a little bit off. Now coming back round to Monday yesterday was this huge sell-off with headlines like this: hedge fund cuts China stock to zero in year worse than 2008, blah blah blah. Shanghai hosts 2,245 hedge funds, about a quarter of the nation's total, according to this company here. In short, everything was down yesterday. So what we're interested in is if everything is down, what's going to go up? At the US Open, about 2 p.m. UK time here, I then went back to my list of Chinese companies which are listed in the United States. And then what I was able to do, because I've now got two lists, one from Friday, one from Monday, I was able to compare the gains and the losses from both and then total them up. So here I've got Friday, April 22nd, Monday, April 25th. And these are the gains or losses on the stocks, giving us a total. So you can see what's happened in the last 2 days. You can see how we're narrowing it down from Chinese companies based in the US to different industries to gains over 2 days, creating more of a niche so we can predict outcomes and we can make money. So if I go back to my industry by 52-week high, this list here, I've got the ranking on the left-hand side. That's the position of companies where they're ranking in accordance to where they are in their 52-week high and low. So, for example, the oil and gas one again. Then I can sort my lists by the positive change since Friday close. That's the total of the two numbers. So if I look at my list here, I'm saying food and drug retailing went up the most during this sell-off. Electrical utilities went up second, diversified retail went up third, financial technology went up fourth. That's the gain they've had over the last 2 days. So if I zoom out, firstly, I hope you're watching this on a big screen so you can actually see what it is I'm looking at. We have the name of the company, the industry, the positive change since Friday close. That's the two numbers total together. You can see the total on the right hand side. Then we have the 52-week high and low. That's where the company is based on its ranking in its 52-week low and its 52-week high, the percentage of that, as in where that is. Then we have the change on Friday and the change on Monday, and then the total change for those 2 days combined. So once I put all this information together, what I'm looking for is an anomaly. I'm looking for something that sticks out to me which doesn't go with the trend, something which we can derive facts from. We're saying, okay, look, this is happening, this is real, this isn't priced into the markets, this is where we can predict outcome. So if I go down my list, which is sorted by the positive change since Friday close, which is the industries which have moved the least after this sell-off, and then I look down the list of 52-week high. This is where the stock, in comparison to its 52-week high and its 52-week low, you can see I've highlighted some companies here. So the second one down is a company which is at 65% of its 52-week high, and the total on the right-hand side, it's gained 6.56% in the last 2 days. That is a bit strange. If there's been some kind of a sell-off, then why are any companies still at their percentage of 52-week high, and why is that industry specific staying higher in comparison to the rest? JD.com, again, 56% of its 52-week high, but there's been a sell-off. And as I go down the list, you can see the ones I've highlighted, we've got a high 52-week high in comparison to some quite low numbers. And for anyone who's got 20/20 vision or eagle eyes, you'll see I'm comparing the share prices on the Nasdaq in comparison to the share prices on the Hong Kong Stock Exchange from my market movers, the thing I open this video with. Now, if you look at these two things separately, both for JD.com, on the Hong Kong Exchange, it was up 6.1%. On the US Exchange, it was up 5.6%. So even though we're using these two things interchangeably, we're saying they behave almost the same because they pretty much are. Now, if I go to the bottom of my list, no surprising, you'll see that software and IT services is at the bottom. That's the industry which has moved the least through the Friday and the Monday sell-off, ranking at the bottom of our list. You can see the change in the total column on the right-hand side. Most of them are negative. However, the ones at the top have actually moved up. So there's been a sell-off in tech, but these companies have moved up. These first five here, Seco, DD, NetEase is the other one on our list here. Pinduoduo and Beidou Inc. Again, now, why are these companies moving higher when there's a technology sell-off that started in the US on Friday and moved to China on Monday? And then, as I was working through this flashed up on CNBC, the exact same companies I was looking at, and they were talking about how Chinese technology companies haven't moved in correlation to everything else. Now, if you're really that interested in the timing difference of the numbers, if you compare the numbers from my columns, April 25th, 2022, against these ones, you'll see the timing difference of what I was doing versus what was happening on CNBC. Now, unfortunately, when something is public on CNBC, that means the whole world now knows about it. Everyone now has access to this information. So the chances of you predicting something using what you're seeing on CNBC is unlikely to work very well. This is the time I took that screenshot yesterday, Monday, April 25th at 7:15 p.m. Note the name of the screenshot, CNBC Real Time. I didn't put that in there. Apple Notes adds that automatically when you drop photos in your notes. That's pretty scary stuff. So you can see how this kind of stuff works. You navigate different bits of information, find things that don't add up, and that's when share prices move. You're looking for pieces of information which aren't priced into the market so you can predict outcomes and you can make money. Now, this is why we call it following the yellow brick roads, because that is what you're doing. You're navigating your path to happiness and success through information. So the obvious question, as always, is what's going to happen next? Now, this is taken this morning, about 20 minutes ago on CNBC. Everything is up today apart from travel and leisure. So when you have a down day followed by an up day, there's something you can guarantee: somebody made a lot of money somewhere. Somebody predicted an outcome. Somebody got richer. So again, let's go back to China. This is the China A50. If we look at the gainers from today, which is Tuesday close, by now, China's ahead of us. There's all the construction, railway, state construction, railway, and then the losers, electronic materials, life insurance, securities, insurance, quite big companies. And that sounds like a bit of a blend to me. There's nothing that stands out as a yellow brick road or a path we could follow down to success and happiness. However, if we look at Hang Seng, the Hong Kong Stock Exchange, the losers here are HSBC, Hang Seng Bank, China Life Insurance, CNOOC is Energy, Bank of Communications, Bank, all the banks are down. So if I look at what's positive in Hong Kong, we're saying we've got a web-based shopping company, an audio solution provider, power tools, Alibaba, automotive, pharma, drug development, fibre optics, and sports product. So what does that tell you? Tells me that the news that we watch is mostly bullshit. Yesterday it was COVID, it was panic, it was, oh my god, it's the end of the world, and now everything's come back up the next day. Especially in the technology space, I can imagine somebody like Cathie Wood was just banging her head against the desk, not knowing what to do. So what we're saying here is the little panic is over, somebody's made a lot of money, so what's going to happen next? If I look at the US after hours, which is the stuff that hasn't opened yet because it's not opening time in the US, you've got these companies here, Roper, an industrial company that produces engineering products for niche global markets. Now that's good for our company Wolfspeed. Now Wolfspeed was a company I identified a few videos ago, which is accelerating the transition from silicon to silicon carbide using electrical components. This is a long-term play here. So if we look at the United Kingdom, what's happened this morning, National Express. National Express is a bus company. Now that's up 6.4%. We've also got some house builders, some mining, some banks. This National Express company here, up 8.9% in one day. My bet is that will go down. Now this takes me back to that other company I was talking about, SSP, the Food Travel Experts. Now they're down 0.3% today. This is the company that provides food to all the travel locations such as airports, railway stations, and where people travel. If I go back to my Hong Kong list here, web-based shopping, audio solution, power tools, my bet is consumer. Now if I Google here, US consumer stocks, I've got Staples, Costco, ADM, Albertsons, Procter & Gamble, Pepsi, Celsius, Fresh Pet. Now from that list, my bet would be Celsius based on what happened with Coca-Cola being at its highest yesterday. So if I look at Celsius holdings, it's already happened, it's up 9.6%. This was when the news came out 21 hours ago for Coca-Cola, beating results. So what I'm going to do is I'm going to make a video tonight after the US has closed and then carry this video on because this is really starting to annoy me. I'm making the videos in the morning, which is too late to work through stuff because it's already happened by the time the UK opens, which is when I want to have the video up and live so we can see how we got on. So as always, thank you for watching and subscribe, like, fire any questions away, and I'll see you in the next one.
See the wizard, the wonderful Wizard of Oz.